I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for being here. Always great to have you on.
Thanks, Charlotte. Great to see you again.
Good to have you. And we are speaking today just hours after the latest Fed rate announcement. So I want to start there. The Fed left rates unchanged, which I think was no surprise to anyone. But this was Kevin Warsh's first meeting in charge of the Fed in that chair position. So lots to go over there. I wonder if you can start by pulling out your key takeaways from his commentary.
Yeah, just to note to everyone, I don't have any notes, in front of me. I don't have like quotes, of company CEOs or Fed chairs. I go off of my head and I have a pretty good memory for things. So, I mean, this was easy because it's a few hours ago. But Charlotte, this is a sea change, I think, in terms of direction for the Fed. My takeaway was less transparency, less wordiness. Let's get to the heart of the matter, meaning price stability, in his words, multiple times. And that price stability means we're not cutting rates as early as people think we're cutting rates, unfortunately, for gold and silver investors if they were looking for that. However, I think when you're a powerful person like he is, to come into your first meeting, there's a lot of pressure. There's a lot of eyeballs on the situation, to say the least. So I think over time he will moderate, and that will take possibly months for him to moderate, right? Because he's coming out of the gate saying, we're not going to necessarily raise rates in July, but we're definitely keeping that on the table because we have to get inflation under control. That was his main theme, along with price stability, was inflation is just too high. He said twice that over the last 5 years, they didn't get it done. I think he almost worded it that way. And that's kind of a shot to across the bow there to Powell and a lot of people that he still is sitting with on the committee, right? Where inflation is just too high. If you looked at the last CPI read, it was ridiculously high. Now, part of that is energy. Part of that is, the war and what happened with oil prices. But part of it is just, general markets are, if you're an investor listening to this, go check out, meat prices, egg prices. Like I like to eat steak. I don't have any problem saying that to people. I just happened to look through my notes, and steak was, it's up 120% in the last 2 years for the type of steak that I was buying for my family. And that's not a 4% CPI or whatever, right? That's the disconnect that I think a lot of people, including myself, have a real problem with, is that if you're going to raise prices on airline tickets to us as consumers, well, yeah, 10%, 15%, yeah, we get it. It's like 40 to 100%. Everyone knows this. Just try to price a flight round trip to your favorite destination that you normally would have a year ago. It's just out of control, and the consumer's getting it on the chin here. So as someone who thinks inflation is stubbornly high, I was happy to hear him say that, but it's not going to be without some pain. And I think the market is like a spoiled child, what I mean? Like the NASDAQ or the S&P, these type of investors just expect things to move higher all the time. And someone like Warsh, he's pretty pragmatic, and he's just going to tell it like it is. So I like that it was less wordy. I like that you kind of walked away with a pretty good sense that he's going to build these task forces, he said, to really kind of get a grip on things like inflation and 4 other items.
Great takeaways. And you pulled out a number of points that I was noticing as well. We got that shorter statement. We did get the dot plot, but we didn't have Warsh participating in that. And I thought that was interesting and goes with the point where it sounds like there's going to be less forward-looking commentary from the Fed moving forward. So that I found really interesting because, of course, in the gold industry, precious metals industry, we're always hanging on to kind of every word from the Fed. So if we're entering a new era where we get less, what could the potential impact be, if we can even say at this point?
Well, one of the impacts would be that these are higher stake meetings. Someone from the audience asked him, do you plan to do what Powell did and do one of these press conferences after every meeting? And he kind of gave a roundabout answer to say when I have something relevant to say, I'll do something like this. When I don't, maybe not, right? Like that was my takeaway. And less transparency when you already have all this transparency is going to be an adjustment. I don't think it's a negative thing. I think it's just an adjustment for the average investor, for the average institution out there, for the average analyst out there. They're getting used to a different environment. And so today was big. 9 out of 18 participants were kind of on the fence about rates. And I think most people probably had 2 to 4 instead of 9, right? Like as their number. So that's an adjustment to how you look at the US, world, if you will. And a lot of economies, Charlotte, take, their guidance from our economy and what's happening with our Federal Reserve. So this is going to have some impact globally, I think. And that's part one. Part two, I definitely want to talk about the war, because I think the war is super important as well. And we just had a resolution there just a few days ago.
Yes, let's take a look over at what's going on with the war, because this is another very interesting piece of the market right now. So we have this potential peace deal. I don't know if that is 100% going through at this point. Maybe you can talk about what you see, because that ties into inflation as well. We had that hot US inflation data next week. People are concerned, even if the war does wrap up right now, that could continue reverberating through the economy. And of course, we can throw the gold prices reaction in there as well. So let's hear your thoughts.
Yeah. So the war, as I've said on your show in April, and I've said on probably 10 other shows since February 27th, it has been hugely impactful to the downside on the mining stock business, right? The HUI, which is something my partner Don Durrett likes to talk about a lot. I prefer to talk about GDX. Either way, they're both large cap gold stock indexes. These things got crushed. I mean, we're not talking like down 10%. We're talking down 35 to 40% in a lot of producer names. Many juniors were down 25 to 60% that I track or own. Very, very challenging price action from the war announcement February 27th to the resolution that we saw, or as you put it, hopeful resolution, the weekend of June 12th. That's a 3.5-month period of time, and it was a double correction in my opinion, right? We saw the average stock down about 40%. A typical correction would be 20%, right? So like, my heart goes out to your listeners. It's been a difficult period of time, there's no question. However, leading up to that period of time, I think we got ahead of ourselves in the silver price, in certain stocks. We were, I'd say, net sellers in January, February, more than buyers. And we've been net buyers in June. So, we flip-flopped from taking gains in January, February to now buying again in June because prices got too low. Some of these RSIs, relative strength indexes, got to 20 to 30. Anytime you crack 30 on an RSI, as we've talked about before, that's one of the metrics we use. You have to start thinking about buying a position in that stock if you like the stock, right? And you've done your homework. So I feel that the war being resolved is a huge plus. You saw that in price action kind of leaking on June 11th and 12th into the weekend, and then an explosive day on Monday the 15th. Decent day yesterday. Not a great day today because we started good, but then the Fed did their thing. And this is what we've been talking about to subscribers, is that you have to watch two main things right now, which is the Fed and the war, and really just watch Trump all the time. I mean, because he's got a mind of his own, and it's not going to change, in my opinion.
Well, I think that's very useful. So let's hear a little bit more about your gold stock strategy right now, because I think among our viewers, many people have a positive long-term outlook for gold and the gold stocks. But the question is, are we at the bottom? Can we fall further? And people are just not quite sure if now is the right time to be buying and getting in.
Right. So there's never a perfect entry point. We tend to buy 4 to 8 times, I'd say, on the upswing, during where we're entering a stock. So we don't buy once ever, pretty much. I think it's a mistake to do that. So we usually have a bid close to the price action and another bid about 10 to 12% away from the price action. In the case you have some big selling like we saw after the Fed announcement today, right, where maybe you'll catch some market sellers instead of people putting in limit orders and be able to capture a good price. For us, I'd like to focus today on 2 Canadian names and 2 African names in the gold space. We just saw 1911 Gold, AUMBF, AUMB in Canada come out with a $20 million offering. So the stock got hit. Whenever you do a financing of size, you're going to get hit. But I think what was interesting is that they had announced earlier in June a financing and pulled it the next day, and that also hurt the price. So now you've got a situation where a company like 1911 is going into gold production next year, and they're doing it with a past producing mine that they're restarting. So this has less risk in the sense that it was producing. This is a restart. This isn't, from day one. And they've raised a lot of cash already, so you're not going to see a huge, equity raise, I don't think, like right away, because we're getting one right now, right? So now that the bad news is behind us, this is when you typically look to buy stocks like this if you think they're going to make it to gold production. I think that Sean and his team are going to get there. So does Don Durrett. Don Durrett has 1911 Gold as one of his top 50 picks from now into next year. So 12 months from now, right? So we look at a 12-month period into next summer. So that's one that's interesting because it was trading up to 80, 90 cents earlier this year, and now you're trading at 45 cents, right? It's half off. Triumph Gold, we just interviewed literally overnight. So that one is TIGCF in the States and TIG in Canada. John Anderson had a really interesting message, which was, hey, it's go time. We're going to start, focusing on our 2 million ounces of gold in the Yukon. The Yukon's not broken. Victoria Gold's failure there a number of months ago still has put, I wouldn't say a dark cloud over the Yukon at all. I would say that, it's presented some questions from investors like, is this a district thing or is this a company thing? And I would argue that's a company thing. This has nothing to do with the Yukon. So Banyan last year got smoked on this, kind of like territorial sell-off. Look at that stock now. It's up hundreds of percent from where it was. But this one, Triumph Gold, is different because they purposely, Charlotte, made the decision that, hey, we're not going to market until gold gets to like 2,200 to 2,500. So they kind of shut down their marketing for 2 or 3 years and said, we're going to preserve the capital structure, right? We're not going to issue all these shares at cheap prices and drill the heck out of something when no one's paying attention. Now at 4,000 plus gold, people are paying attention. So John is not only going to do work on his gold project, which, by the way, has tungsten and antimony on it, but he also is going to do work in his silver project in the U.S. And drill the first 6 to 8 holes there ever. So, I mean, pretty exciting. They just raised $5.4 million, so they're cashed up and ready to go. Switching over to Africa, I have to look at the symbols on this one because this is a new name for me, but I try to point things out on your show and other shows like Kitco where, people can start doing some work, if nothing else, on a stock. This one's called Sylla-Gold. It's SYGCF in the States, SYG in Canada. I just met Regan here over the last couple of months. He's the son of Greg Eisenor, who runs KO Gold, and that's a position for us as well. And, I said, hey, let me know when you're thinking about, doing some drilling here in Africa, because, there's a lot of prospective land in Africa. It's one of those jurisdictions to me that you have to be focused on, or understanding that there is risk, but there's high reward as well, because the cost of doing business over there is so much lower. Like the all-in sustaining cost per ounce in gold in Africa is way lower than a lot of jurisdictions. So you can make great margins if you're successful. So their press release that just came out within 24 hours ago kind of hinted that they're going to start drilling again and start moving in the right direction. And that's what I was waiting for. So it's one for people to probably start nibbling on now and keep an eye on, because this is something that, isn't going to be a 2028 thing. It's going to be a 2026 thing. And so again, that just talks to what we talked about earlier. The timing of things is important. However, you have to start taking positions now that the war is over. The Fed's going to be the Fed for sure. But you can't just sit on your hands and say, well, I'm just going to wait for the perfect entry point. I mean, stocks are down a lot, and so is this one. Lastly, in Africa, we have Xtra-Gold. That one's XTGRF in the States and XTG in Canada. I met with James Longshore for the first time at my conferences last month. I had never met James. This is a story in Ghana where they have probably the 7th or 8th largest producing gold project there. But what's cool about it is they have 4 or 5 other pods that they can drill. They have a massive land project. I mean, it's like a couple 100 kilometers or something insane. It's just a massive piece of land. So they've been exploring for 23 years. So when you look at explorers, a lot of them, right, are 2 to 5 years old. They're putting some holes in the ground. Some of them have no idea what they're doing. These guys actually have a pretty good grasp of how to explore and how to do it cost effectively and bring ounces out of the ground. So it's one that, if you look at the chart, it's a beautiful looking chart because it's just made consistent progress. And I think that in talking with him, they plan to drill a lot more in this year into next year. So I think that project is going to grow in size.
Well, always good to hear how companies are operating in this environment. And I know you really emphasize that we can't get the timing perfectly on these things, but I want to wrap up on the gold price. I think a lot of people are curious right now on the direction that it's going to go in the summer and beyond. So what are you seeing maybe in the next couple of months? And I know that you talked last time about how we could retake new all-time highs within the next year or so.
Yeah, I still believe we'll test 5,500 again by the first half of next year for sure. The geopolitical situation hasn't changed for me. The Middle East is still a mess. It doesn't matter that we're, writing a truce, if you will, here. It could last weeks, months. We don't know. That situation is always going to be a problem. But if you said to people, hey, did you have Cuba, Venezuela, on your list this year, I guarantee you most people had none of that on their list for conflicts, right? So including myself. So Trump is a wild card. He is going to do what he's going to do. And it's going to cause, in my opinion, a base price for gold and silver because people are now waking up to the reality that the world isn't as safe as people think, right? There's multiple wars going on as we record this. It could get worse. It could get better. I hope it gets better. I don't like talking about this stuff, right? I have to be realistic for my investors that the world has kind of changed over the last few years. So I think you've got a higher bid on gold than people think. That bid for me is around 3,500. I don't think that 3,500 breaks to the downside. In a perfect world, I don't think 3,800 breaks much to the downside, maybe 37, 3,800. 4,000, however, has been that big round number in the sand. And so 4,000 has been holding. If you look at the price action since March 1st, we have never broken 4,000. That's huge. So for all these naysayers, look at the charts, right? 5,500, sure, I get it. It was high, it was great, but 4,000 is not bad. A lot of gold companies are going to make absolute hand over fist money at $4,000 gold. So longer term, we think we revisit that 5,500 Charlotte next year. In the short term, we have to kind of look at maybe 47 to 4,900 as kind of our next resistance levels.
And let's bring silver into the picture as well, of course. Can we take a look at support and resistance there? Because, of course, we all know that the price can be more volatile than gold.
Sure. Silver remains our largest position. I did sell some, as I told you, over 100 an ounce because I told you and 10 other podcast hosts that I would be doing that, so I did it. But silver is very much needed. It's in a deficit. It's getting to be more needed, I think. It's now on the critical minerals list, which is big. And silver's got a base of $60. $60 to $61 silver is holding. It held twice. So go back and look after the June 5th huge sell-off we had. It actually clipped 61, I think, again, and then just bounced. It's that's why technical analysis really matters, Charlotte. You have to be looking at these charts to understand, right? Because many people think, oh, 50 is going to break to the downside. Well, guess what? We're making a higher low right now, and it's not quietly. To me, it's obvious, that the silver price is going to stay higher than people expect, meaning generalist investors. For people that actually know what's happening in silver, we all want 90 plus, right? I mean, that's what we want to see again. But we have been in a trading range, to be fair, of 70 to 90 for a while. We broke lower. Now we've got to regain that range first. So I hate to say it, but it's sort of baby steps for silver. You can't be like, oh yeah, let's go back to 120. We need to get, back to the trading range we were in, which was 70 to 90. And that would be incredible for a lot of silver producers, because remember, the silver producers out there are producing between, 19 and 25 an ounce. So they're going to make hand over fist money as well.
Well, and on the note of the silver stocks, how have they been doing during this price pullback? Because, they tend to follow gold, but as you're saying with the prices, I imagine they might even be in a better position at these price levels than the gold stocks because it's so significant for silver.
Silver stocks have sold off more than gold stocks because the silver price has been more volatile, right? So there's a little more, like I always say this, silver investors are more rabid than gold investors. And I mean that in a good way. Like they really, you can see what happened with the price action on the way up. It went up huge. And then on the way down, it does go down huge. So people, gold investors, I think, are more steady. Like they look at things and say, I can live with this price action. Gold is, gold. It's been around for thousands of years. It's not going anywhere. Silver's got a more of an industrial, aspect to it these days than some people think. So there's going to be more selling and more shorting, and different things happen to the metal. But at the end of the day, it's still our top holding because it is undervalued versus gold. And we do believe that the precious component of silver showed itself from December, January, February, right? That wasn't industrial. That was precious, the precious component of silver showing itself off. So look, we still think good things for silver in 2026 and 2027. As far as stocks go, I can give you like one or two. I know we're, a little pressed for time today. Silverco is one of my larger cap names that I'm buying into now for the first time. So that's the name that I first gave your listeners in April. And that one is SICOF in the States and SICO in Canada. Mark Iranto actually spoke at my conference in DC, did a great job. Since we recorded in April, they came out and purchased a second project in Mexico, and that has closed now. So they have two very large prospective silver projects in Mexico, and Mexico is on the upswing, right? They just, Gold just got their permit for underground mining, GDF. And that is a really good sign, because it's showing that Scheinbaum is understanding that, we need to keep this mining thing going. It's been here for decades and decades in our country. Like, why would we want to be suppressing growth in a period of time where the economy needs stuff like this, right? So I think, something like Silverco makes sense because it's in a jurisdiction that understands silver, and it's, got a lot of it. And so I think, they're very, by this time next year, they're going to put up some pretty nice production numbers. So you don't have long to wait as an investor. The other one is Silver 47. I'm kind of perplexed on this one. It hasn't worked out as well as we would have liked, to be frank, this far. That one is AAGAF in the States and AGA in Canada. But I met with the CEO and their number 2 guy in Florida at my conference. And I sat down for a half hour with them, just picking their brain on different things. And every answer I got checked out, So, I mean, this is something I regularly do, Charlotte. I don't come at it as aggressively as some people do. But I do go back to stories and just make sure I'm not wrong here, or I didn't mishear something. I'm human, right? So like things happen, but they have 3 U.S. projects, New Mexico, Nevada, and one other state. And they've got over 300 million silver ounces equivalent right now. I mean, this is, if you want to bid on silver, this is the kind of stuff you purchase now at 44 cents, because this was at a much higher price last fall, right? So silver took off, the stock kind of participated. but now it participated a lot on the downside for whatever reason. I think the takeaway for investors is they have a lot of silver in the ground already, but they also are going to continue to drill. They're totally cashed up, right? So are they drilling 3 months out of the year, 6 months out of the year? No, they're drilling 12 months out of the year. They have 3 projects in the US with good weather where they can rotate the rigs. And that's what I think the people are missing with the story.
Well, those are ones that investors can take a look at, do their due diligence. And outside of precious metals, I did want to bring up critical minerals today. I know that you're often looking in some neglected sectors, but critical minerals, maybe they won't be neglected for so much longer. I think the Iran war has really highlighted global supply chain vulnerabilities. So what are you looking into on that angle?
Yeah, so we have been fortunate enough to talk about tungsten on your show. Gosh, I think since the fall of 2023 with names like Perpetua, PPTA, and Guardian Metal was a huge holding, still is for us. GMTLF on the OTC and GMTL on the big board. GMTLF and GMTL have been one of the best investments of my life. I mean, I'm not going to, a lot of people talk 5 and 10 baggers, but they rarely get them. And this has been just a tremendous investment. They have done a tremendous job in tungsten in the US. They're coming out with their PFS, preliminary feasibility statement, coming up in the end of June, they said. So, I mean, they said end of Q2, right? So June 30th, we're recording this a few days before. So, I mean, this is something for investors to watch, right? Because when a PFS comes out, it's important to fact check yourself to make sure there's nothing in that report that seems wonky. So it's not always a positive, right? It could be a negative, but I don't think so in this case, because I've talked to the company pretty much every 2 months for the last, 3 years. It's one of my larger investments, so I stay on top of it, and everything I see here is positive. 47% of their shares are tied up in 3 or 4 entities, one of which is Stan Druckenmiller, the billionaire. He owns 14.9% of the company. He's not selling. So there's a lot of shares tied up in good hands. One of the things we look for. Another one is Western Star, which is another tungsten play, also in Nevada. We mentioned that on your show last time, probably around 39 to 40 cents US, and it ran to 65 cents US. So a nice move. It is now trading at 28 cents. So this is one of the reasons, you have to be careful, Charlotte, if you're just a buy and hold investor, is that you're going to have ebbs and flows. It's going to happen, right? But I would argue the run up as tungsten's price was moving up was fair to Western Star, right? This move down doesn't make any sense. We've identified that they have naked short sellers in the stock. Like literally, they only have 20 million shares out as of the last presentation deck. So when you see volume of like 400,000 or 500,000 shares a day, you're like, where is this volume coming from? If you're doing the math, it doesn't add up. And the CEO, Blake Morgan, agrees. So we are buying that stock because I think that the shorts are going to have to cover here at some point, because the tungsten price is so high and so elevated, even since January 1st, that sometimes shorts just don't do their homework, right? Like they don't understand that A, it has a small float, small number of shares out, and B, they're shorting a metal that you never want to be short. I mean, tungsten is just, again, used in tanks, body armor, missiles. I mean, like you get on the list, it's very relevant in today's world, and it's 84% percent produced in China. So there is no supply in North America. The last tungsten ounce, if you will, that was mined in the U.S. 11 years ago. I mean, this is like a renaissance. So when people tell me, hey, I think this tungsten thing is over, I think they need to do more homework on what's really happening. I think it's just the opposite. I think we're like in inning 4 or 5 of 9. We're halfway through, but there's still upside. And then lastly, I'll mention PTX Metals, because I just talked to Greg today. That one is PTX in Canada and PANXF in the States. By the way, Western Star, who I just mentioned, was WSRIF and WSR in Canada. So PTX Metals is trading at like the same valuation they were last fall. Yeah, we've seen like a huge rally, right, in the sector. But they did get to 16 cents US on a very, very big, volume streak there for a number of days in a row. So that's more than double where the shares are now, right? So like when you look as an investor at a chart, you have to say, okay, was this the real price or is this the real price? I would argue that the stock at 7.5 cents US right now has based, like meaning that this is sort of the support level. And 16, 17 is sort of like where you hope to go, right? That's over 100% gain from here. But it just happened a few months ago. This isn't like 5 years ago. So the stock has plenty of copper, which we love. Copper just made an all-time high since our last recording. That, if you want to take a look at the price, you can look at it through CPER, which is the copper ETF. And it's got a lot of platinum, palladium, and gold. So we love all four of those metals. And here's a stock that is also going to spin off their uranium stock called Green Canada. So, I mean, as an investor, you get access to really good metals, but you're also getting a spinco in uranium, which, is getting, more attention. I'm sure you've interviewed Rick Rule and some others that, talk about uranium a lot more than I do.
Yes. We definitely have uranium as a favorite among other people. I think that we have come to the end of our time. I know I have to get you out of here. Any very final thoughts before I let you go?
Yeah, I just wanted to mention one area that I think people can look at, because on your show every year I try to mention a couple of new areas like tungsten or antimony. And so I'll mention AI data centers. AI data centers are, a part of the AI world. It's not like buying NVIDIA, but it's an area where you need a lot of energy and you need batteries and different things to power these things, right? And a couple stocks, to give you a new one, First Phosphate called me last week, and it was a really interesting story going through the pitch. That one is FRSPF in the States and PHOS in Canada. If you look at their website and look at LFP battery, just click on LFP battery at the top, and then you can click down on a drop down, like what the uses are for those batteries. And the first two things that come up are energy and AI data centers. So that's interesting. Second thing is LFP batteries are 90% produced in China, almost the same dynamic as tungsten. So that's what really got my attention. It's like, I have a theme for sure in my investments that I think China dominates certain markets and that North America has to catch up. So this is a North American play that will catch up in the sense that there's not a lot of competition in North America, right? They have a great chart in their deck that outlines this. So I'd encourage people to take a look at firstphosphate.com. Also, Jericho is one that I just started to see news on last week. And that one is JROOF in the States and JEV in Canada. They announced a big joint venture with a much larger company in the AI data center space, and the stock has really responded. It's up probably 70% since then. But I followed this stock for years. It's an oil and gas play in the US, still very interesting. But it's interesting, Charlotte, to just note that like sometimes you need something else, another catalyst to take the stock higher.
Yeah, those will be interesting to follow. I'm sure we'll talk about them more in the future. For now, we'll wrap it up. I'll let you go, but thank you so much for coming on to talk about what's going on in the markets.
No problem. Thanks for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.